All right, today we're going to break down a seriously bold bet happening in crypto right now. We're looking at a huge daily investment strategy, and it's all built on a wild forecast that says Bitcoin could hit $200,000 by the end of this year. So let's dive into the logic, right? How does someone even get to that conclusion? So get this is the actual quote. I'm buying between like $3,000 to $20,000 worth of Bitmine every single day. Every single day. We're talking about one trader with just this incredible conviction, right? They're building up a massive position in a crypto stock, day in and day out. This is not some casual punt, it's a super systematic bet. So you have to ask, what in the world makes someone that confident?
Okay, so to really get inside this trader's head, to understand that level of confidence, we got to look at a specific, super high-risk trade that really sums up the whole strategy. Because it's not just about buying the stock. Oh no, it's about betting on the upside in a huge way.
So here's the trade itself, broken down. They put in $5.5 grand, not on the stock directly, but on call options for Bitmine. The key numbers here are the strike price, $47, and the expiry date in mid-January. So what does that mean? It's basically a bet, a really leveraged bet, that Bitmine stock is going to shoot way past $47 a share before the middle of January. If it does, this trade could be an absolute home run. But if it doesn't, that whole $5.5 grand? Poof, gone. Which, leads us right to the big question, doesn't it? A bet like that, basically all or nothing, you don't make that on a gut feeling. It has to be backed by some serious analysis, a really powerful forecast. So, what is it? What's the thinking behind this incredible conviction?
Well, the why behind this whole thing, it comes from the analysis of a pretty well-known market strategist, Tom Lee. His forecast is super bullish, and not just for crypto, but for the entire stock market. And that's the foundation for this whole high-stakes play.
But here's the weird part, the paradox. Tom Lee's bullish outlook is happening at a time when most investors are, frankly, terrified. The market is climbing what he calls a wall of worry. It's this idea that stocks are actually going up despite all the bad news and all the reasons people think it should be going down.
And here's exactly what that wall of worry is made of. Look at this list. You've got the threat of a government shutdown hanging over everyone's head. You've got all this uncertainty with China. The Fed is talking tough, being hawkish, which means they might keep raising interest rates. And on top of all that, the market's already been on a tear for 6 months straight, so a lot of people are just waiting for the other shoe to drop.
And this quote from Tom Lee, this is the absolute core of the whole argument. He says, investors feel like it's a bear market, but we're up 17%, which kind of tells me I think there's a big performance chase in your end. Think about that disconnect. Everyone feels like the sky is falling, but the market is actually having a great year. Lee doesn't see that fear as a red flag. He sees it as rocket fuel for a huge year-end rally, because all the big money managers are going to have to jump in and chase those returns. And this really just lays it all out, doesn't it? On one hand, you've got how investors feel, totally bearish, scared of a downturn. But on the other hand, you have the reality. The S&P 500 is up 17%. And get this, a crazy 80% of fund managers are underperforming the market. They're losing to a simple index fund. And as we get closer to the end of the year, the pressure on them to catch up is going to be absolutely massive.
And this number, this just drives the point home, negative 11.5%. That's the average investor sentiment for the whole year. A number that low, that bearish, has only happened 3 other times in the last 35 years. And you know when those times were? During actual bear markets. Not in a year when the market is up double digits. It's completely unheard of.
Okay, so it's not just about feelings, right? What are the actual economic reasons for this bullishness? Well, Tom Lee points to a few huge things. First, inflation is actually falling way faster than people expected. Second, we're seeing a big productivity boom, probably thanks to AI, and that's great for company profits. Third, there is a staggering $7 trillion in cash just sitting on the sidelines waiting to be invested. And finally, just looking at history, November tends to be a really, really good month for stocks.
All right, so if you thought that forecast for the stock market was bullish, just wait. What Tom Lee is predicting for crypto is on a whole other level. Seriously, this is where things get explosive.
So the key idea here is something called fundamentals leading price. What does that mean? Basically, in crypto, all the important metrics, like how many people are using the network, how much money is moving around, are just surging. We're talking about things like Ethereum stablecoin volume and the revenue from its apps hitting all-time highs. The whole theory is that the price of Ether itself hasn't caught up to all this real-world usage yet, which means it could be seriously undervalued. So, that leads to the big question, right? If the fundamentals are this strong, and we're expecting a huge market rally anyway, just how high could crypto actually go by the end of the year?
Here it is, the big number. Tom Lee's year-end price target for Bitcoin is between $150,000 and $200,000. Just let that sink in for a second. That is a stunning, absolutely massive forecast.
And it's not just Bitcoin. Look at Ethereum. The prediction here is just as wild. Lee's year-end target is around $7,500, which would basically be a double from where it is. I mean, can you imagine? A move like that would send massive shockwaves to the entire crypto world.
Okay, so now let's bring it all home. Let's connect all these dots, from this explosive crypto forecast all the way back to that high-stakes options trade we talked about at the very beginning.
So here's how the thinking goes, step by step. 1. A massive crypto rally kicks off, powered by those strong fundamentals we talked about. 2. Ethereum starts charging towards that $7,500 target. 3. As Ethereum's price explodes, the value of crypto stocks like Bitmine, which hold these assets, also skyrockets. And that leads directly to step 4. Bitmain stock blows past that $47 price target, and that little options trade becomes a massive, massive winner. See how it all connects? And this quote just says it all, doesn't it? Now is the time to get greedy. It's the classic playbook, right? When everyone else is fearful, but the data is telling you to be bullish, that's the moment you're supposed to be aggressive. That's the whole thesis in a nutshell.
And so that really is the big question, isn't it? Are we looking at the setup for one of the most epic year-end rallies we have ever seen? Or is that wall of worry for real, and this is just the calm before the storm? We'll have to see. Stay tuned, because the next update could change the whole game.